Hello and welcome. It is the week ending March 24th, 2017. My name is Derek. Welcome to this weekend silver chart analysis looking at four different time frames: the daily, weekly, monthly, and the 4 month chart. And within the daily chart, there was a long standing 2+ month trend, as you can see drawn in here. And the market since has had this one leg lower and is now come up to this resistance point. So the current phase of the market is now establishing resistance for attempt to revert trend. And here it was correcting within the first leg lower. That phase is over and it ended within a break of this band, and in Friday's session a move not quite up to the 1787 mark. Close, but not quite. I mean, that would have been close to 2%. That's extreme volatility. Sarcastically, but realistically speaking, that is because there has been so many of these microscopic volatile days within, of course, this particular chart. So therefore, within this attempt, I would still like to see it make a move at least to this point, although it's pretty darn near close at least, but even more still probably a pierce above it, closer to the 18 handle. And then at this point, the 18 average band, which is now flat, would start to rise, and you'd be looking for a correctionary move. And on a situation of this kind of magnitude where you have this uptrend and you have a correction as deep as this to do nothing more, well, that's a failed move, to say the least. And a failed move, at least on the downside, represents a fast move opposite direction. Opposite of down is up, and that would be a move of a break of this level, a decent break of that level as well. If, of course, it is a failed move, and the more this goes up, then it's going to be a failed move either way, because if this is supposed to be a new downtrend, because that's what you're kind of saying when I look at the story here within this move, then if it's supposed to be a downtrend, then why are we not resisting within this band? And it's now at the point where, because if we are, then you're supposed to correct in here. But if it goes up like this and then up and then down lower, well, the test that I'm looking for always seems to work out well within this level. But in any regardless fact, because of this high, you're now stating, okay, we made this high. Okay, sure, you can get above this 18 band. That happens in many cases, but you got a long ways to go here. And when you do develop a lower high and you have further momentum lower, you could easily have sellers taking over control of the market, make a move to the 18 average band, and either continue lower or maybe make yet another lower high and then continue lower. There's so much work that is needed to be done for the reversal of trend, which is why I'm looking for a move, again, up to this level, some sort of pullback to the band on some level, and then a break to probably have a good chance of another leg 2 or 3 higher highs and higher lows. So therefore, flip side reaction now, any types of weakness in this lower end area is going to set up a lot of short setups and decent probability that even further lows would continue. And then again, it's on the if case scenario, because anything within this band is in that of a neutral setup. Now let's switch it over to the weekly chart. And its current phase is an attempt to leave this band to attempt a break for change of trend. So attempt was written in there twice, as it was designed for such, because it's now just breaking this 18 average of highs. And as I've talked about so many times for reversal of trend, establish resistance, come back to the band. And in this case, it came right down to the 18 average of lows. And it is in a sense accelerated over a 2-week span to get past this point. So therefore, it's getting past it. The next step is to get past this resistance in at 1854. And doing so, of course, is what it is to attempt the change in direction. So that's what it's looking to do. And to do that, it has to break this resistance. It can easily come up and make a matching high, high or low. Those are all the things that could easily happen as well on the bullish level, but that's generally what you're looking for, is any clear break above this point. If this does fail and you start to go lower again, we'll be talking the failed breakout above here, because you'd be saying, okay, heck, wait a second here. It was bearish for the final half of 2016. And you tried your darndest with like 9 consecutive up weeks in a row, and yet you're not going bullish. So that's why the failed move fast move comes in, and that's why you would have a decent move. And in this case, it would be to the lower end of this range if of course, this breakout becomes the failed move. And until you get movements down towards here, there's no indication of that as of yet. Let's switch out the time frame again, and this is shaded in. Let me just fix that for a second. Well, it's negative 3.11% so far for the month down. Volatility 9%, 10% really, but within this chart, its current status is in support phase from its 26th attempt to revert the trend, because you had this down move. After the down move, step 1, band flattens out, establish a level of resistance, come back to the band. And since then, it ended the previous month of February to the top end. It has since retraced, but making a higher low. There's nothing wrong with that. In fact, that's what you need on a bullish level, on the essence of trend. But any break above here, you're now working to, it's the same thing as the weekly chart, I think. Yeah, it's pretty much the exact same pattern. So the weekly and the monthly have very similar situations where it's trying to leave this correctionary phase, get up to a previous key point, and on a break of the key point would obviously be good to spark future legs towards the upside within its time frame. And of course, this time frame is the monthly chart. Let's finish this off within the 4-month chart. The current one is the January to April period. And its current phase is, it's in its first leg down correctionary test. So this is the uptrend, which contained 2 legs to the upside, pretty much, with some awesome intra-period moves. And these are moves where you can literally get in and out for good. There's a lot of good trades available when you see these types of moves within, but a bull run going from $5 up to $50 almost. And since it had a pierce below the 1980 high, it has had this consistent leg lower, which has resulted in support first at the 18 average of highs, one big red candle down within the now or then sideways band, where it had some resistance and support, mainly resistance within the level, for 4 consecutive periods, a little over a year, and then 1 leg lower. So really 1 large leg lower when it's all said and done. And it's had the small pop, which has made a move up towards this band area. And because of such, now it's okay. So we're resisting it for the first time on this level. If this is a reversal in trend, that means on a break of this support, we're looking at a move down to 519. I don't think that's going to happen. And if it does, that would be an interesting situation how that's going to actually physically play out in today's time frame. If that happens, we'll see. If not, then we can only fantasize on such. As far as the break of coming up here, well, as I talk so much about failed moves, that would be defining one as such, because this was a bull trend and you wanted to correct. Okay, that's fine. Just like here, you have a decent correction. Okay. And if you wanted to correct, then, well, this was all fine and dandy, but really was all of this necessary? Well, maybe for the club it was. However, because normally, just one more way of explaining the failed move, fast move mechanism and why it works, and there's so many ways I could explain it, is if this is the area where it's supposed to have support, let's assume that starting from or after this period in here, instead of this red candle, you could have a green candle up. Maybe you do something like this. And next thing you know, you're at like 70. So that's what, like, a lot of catching up to do kind of analysis, which brings this market towards that level. Plus the normal market mechanics of a lot of the shorts getting out and people riding the market momentum, as it happens on so many levels, where once something is bullish and it's talked about, that's when these things just can get out of hand. And I think it's due for that to occur within this time frame. But you're talking about, okay, so within the next how many periods? Within 1, 2, 5, 20, 25, 30? Well, they all sound right. But 30 periods is like 8 years, and one period is this year. So it's very difficult based on using that type of analysis to determine the when. But it's pretty much with the fundamentals of how the awareness of currency is with today's game, and how you can't hide this information once it's revealed within the central bankers, that it's just a matter of time in my book. And that's why my main investment is the physical commodity, nothing within any banking system of any paper digital contracts. I'm playing the physical bullion silver game. Thank you for tuning in, and have yourself a great weekend. Bye-bye.